Hey everyone, if you are a child care provider in the CWELCC system, you are in exactly the right place.
We know just how critical your work is, and today, we're going to demystify the new year-end reporting requirements for 2025. Our whole goal here is to give you the clarity and the confidence you need to handle these changes no problem. So let's dive right in.
Look, we totally get it. Any kind of change, especially when it comes to finance and reporting, can feel, well, a little daunting. But I promise, we're going to break all of this down into clear, manageable steps. We're here to make this simple, practical, and totally approachable.
All right, so before we jump into the nuts and bolts of how you do the reporting, it's really important we talk about why these changes are happening in the first place. Because this isn't just about filling out new forms, it's really about strengthening the entire system for all of us. At its heart, this whole new cost-based funding model is designed to make things fair and square for everyone. It's all about ensuring that public funds are used transparently, that what you report lines up perfectly with your formal financial statements, and, maybe most importantly, that the CWELCC program stays strong and sustainable for years to come.
Okay, let's zoom out for a second and look at the big picture and the timeline. Understanding the key phases is going to be crucial for planning your year and making sure there's no last-minute stress.
So when you look at the timeline, think of 2025 as your reporting year. That's the whole year you're tracking your costs and getting everything ready. Then 2026 becomes the reconciliation year. That's when you submit everything, and then your local service manager goes through it all and makes any funding adjustments.
And here's a really important piece of info. Under the renewed CWELCC agreement, that cap on parent fees is staying right where it is through 2026. That's a key piece of stability for both you and the families you serve, which is great news.
Okay, now for the part you've been waiting for, the real core of our explainer. We've boiled down all the updates into the most important changes you absolutely need to know. Let's walk through them together, one by one.
Beginning this year, with the introduction of cost-based funding, there will be two separate forms to complete. The Standardized Financial Reporting, or SFR, is new and mandatory for all CWELCC providers. It is used to report on cost-based funding only and aims to offer consistency across providers and makes it easier to verify costs and maintain compliance. Then there is the Schedule of Revenue and Expenses, the SRE. This is one you have likely seen before. The SRE is used for the reconciliation of all other funding received in 2025, which would include funding streams like WEG, workforce compensation funding, capacity building, general operating funding, or professional learning funding, for example. An important note, the SRE no longer needs the review engagement letter from a third-party auditor. This is probably the single biggest shift. When we are looking at CWELCC reporting for cost-based funding, gone are the days of lumping all your sites together in one report. From now on, each individual license site needs its very own Standardized Financial Report, or SRF. The bottom line is that funding and costs are now tied directly to each specific location, not your organization as a whole. You may be happy to hear, though, that for all other funding reported on the SRE, it is still done at the head office level.
Go ahead and grab a marker and circle this date on your calendar in big, bold letters.
January 30th. 2026.
This is the firm deadline for submitting your reconciliation templates. Getting ahead of this is absolutely key because extensions are only going to be granted in really, really extraordinary situations.
So let's talk about what costs you can actually claim. It's pretty straightforward. They just need to meet 3 criteria. They have to be appropriate, necessary for running a childcare service. They have to be reasonable when you compare them to market rates, and they have to be directly attributable to your CWELCC programs. We're talking about things like staff wages, program supplies, that kind of thing.
And just as important is knowing what's out. You can't claim personal expenses, costs from a totally separate business, or anything that's not directly tied to providing childcare. Keeping those things separate is going to make your reporting so much cleaner. You're going to see this word attestation. Don't let it scare you. It's really just a formal way of saying you're signing off, declaring that the numbers you've submitted are accurate and that they match your official audited financials. Just remember, the main SRE requires 2 signing officers, while each site-specific SFR just needs 1. And that leads us to the key question, doesn't it? With these new standards, being ready for a review is more important than ever. So how do you do it?
Well, the answer really comes down to having great documentation and just understanding the review process itself.
And this chart breaks it down perfectly. While every single submission will get a standard review, about 5% of providers will be chosen each year for a more in-depth, direct engagement audit by a third party. And that is why having all your receipts, invoices, and payroll records organized and ready to go is so critical. It just makes any review, standard or detailed, a whole lot smoother.
Okay, so you know the what and the why. Now, let's get practical and look at the actual tools you'll be using to get this all done.
These are your two essential documents, the SFR for each individual site and the SRE workbook for the big picture. Now, this is super important, so listen up. You absolutely must use the official templates from your municipality with no changes. If you modify the forms, they won't be accepted, so make sure you download the right ones.
We can really break the whole submission process down into these 4 simple steps. It's just download the forms, fill them out carefully, get your signatures, and submit everything on time. When you think about it like that, it feels a whole lot more manageable, right?
And here's one more helpful resource for you. It's not mandatory at all, but there is an estimator tool available. This thing can help you get a sense of the financial impact of reconciliation ahead of time, which is just fantastic for your own internal planning and budgeting.
Wow, we have covered a ton of ground. So now let's pull it all together into a clear, powerful action plan so you know exactly what you need to do next.
All right, let's get focused. Here are the 2 most important deadlines to lock into your brain. Go ahead and mark those down right now.
January 30th, 2026 is the provider submission deadline. If you send in your submission sooner, the Children's Services team will start working on processing the submissions. Bonus: between the submission date and March 31st, 2026 provider submissions will be processed, and information will be communicated back to providers on the outcome.
So what can you do, like, today? First, download those templates. Just get familiar with them, read through the official guidelines, and, most importantly, start getting your financial records organized now. Trust me, starting early is the absolute secret to a stress-free submission.
And please, please remember, you are not in this alone.
Let's end on this, because it's really what it all comes down to. Accurate and on-time reporting from you leads directly to a smoother process for everyone, and, most importantly, it ensures your funding stays stable and secure. Your hard work here directly benefits your own program.
Thanks so much for joining us, and we wish you a very successful reporting year.